US inflation looks to be cooling, but is the US consumer catching cold? Welcome to Market Insight. I'm David Pollard. It's been a data-heavy day, but the mood is definitely lighter on Wall Street after April CPI came in lower than expected, if only by a tad. Though there is concern too that the mighty American consumer could be flagging. April numbers showed retail sales were flat. Adding another negative note, home builder sentiment has soured for the first time in 6 months as high interest rates on home loans keep customers on the sidelines. Well, joining me now to give her take on all that is Lauren Saidel-Baker, economist at ITR Economics. And welcome, Lauren. Many thanks for joining us today. Inflation came in below forecasts on the month, but is still running at 3.4% on the year. Despite today's numbers, we must conclude that inflation is still sticky, mustn't we?
Yes, inflation is still sticky, but I think we heard a huge sigh of relief from Wall Street and financial centers worldwide because this data point did show further disinflation, and critically, it was the first time in several months that we haven't had inflation beat expectations to the upside. So seeing that further cooling in inflation, cooling in pricing pressures, that is a bit of good news.
So where does this leave the Fed? Are market projections for around 50 basis points of rate cuts this year too optimistic?
I don't think that's too optimistic at all. If anything, the CPI number really reinforced the likelihood of rate cuts beginning in September. I do expect we'll see the Fed wait a bit longer, very likely over the summer. They want to see not just 1 month of data come in to this direction, but further cooling, especially in that critical wage inflation component. So September is still very much on the table for our first rate cut, 50 basis points, even 75 basis points at the outset, not off the table yet.
And what are we seeing with US consumers, and should we feel concerned? Retail sales were flat in April, and Home Depot numbers this week showed that big ticket items and big home renovation projects are slightly out of fashion. Is this the weak spot in the US economy?
I think, if anything, the consumer is the strong spot in the U.S. economy. While retail sales are coming in a bit flatter, growth has been cooling for several quarters, but the rest of our economy, the manufacturing sector, we're seeing outright contraction, much more flatness in the industrial sector. The consumer really, their spending has been propping up our economy thus far. So to see cooling, yes, this is directionally showing deterioration, especially in that lower income end of the spectrum. But we're coming from such a very strong starting point, such a resilient consumer. We have a ways to go that we can still weather this downturn.
Now, the consumer has, of course, been buoyed by a very strong US labour market, but are we now seeing signs of a weakening in the labour market in the data, for example, that we've had over the last couple of weeks?
Yes, and it will be critically important to see that next job report come out next month. The first quarter of this year, very strong, again, much stronger than expected jobs numbers. So that labor market tightness, it was more pervasive than had been expected. The tightness in the labor market, it's a long-term demographic problem. We just don't have the numbers of workers to fill currently in this country, 7.3 million job openings. So directionally, again, a little bit of loosening, but this is not a wholesale change. We will, I believe, by 2025, come back to this much tighter position. It's something that businesses do need to get used to for the remainder of this decade.
We have a round of home builder real estate data this week. US home builder sentiment took a big drop in May in today's reading for the first time in 6 months. Do mortgage rates stand any chance of coming down soon enough to salvage the nascent recovery that we've seen in the US housing market?
Decline in mortgage rates certainly would help, especially for those first-time home buyers. But we have seen some moderation in home prices here in the U.S., so that's having a little bit of impact on housing affordability. At the end of the day, though, it is our income still rising and rising at a faster pace than consumer price inflation. That's helping the affordability picture for the consumer. So it's going to be a long slog. I do expect a bit more stagnation in the housing market before outright rise takes hold. But we have a housing shortage in this country. We do not have enough inventory. So that should act as a floor against a further decline in housing construction.
Okay, Lauren, we'll leave it there. It's been great to hear your thoughts. Lauren Saidel-Baker, economist at ITR Economics. Many thanks for joining us today. That is Market Insight. Don't forget, we have more videos on Reuters.com.